Hey, this is Stephen here from Shire Navigator with a stock market update on October the 13th. So this is our active trade update, and it will be remiss of me not to continue without talking about what happened on Friday in the market. So you can see S&P 500 was down 2.7%. What happened? President Trump, in retaliation to China on Thursday night going into Friday morning, restricting export on rare earth metals that are vital for chips, etc., like that. President Trump retaliated with saying that they would slap 100% tariffs, and he's not even sure that an upcoming meeting will go ahead now between China and the US. So obviously that would be detrimental to both economies if there was a significant trade war escalation like that. And that's why the S&P sold off 2.7%. So I think just in terms of how do you trade this, my preferred strategy would always be in something like this using the short put option strategy, which we'll do in another video. But this is really highlighting the issues at play here. So everybody buys the dip, or has been for the last number of years. And that strategy has worked out to be really, really profitable. Having said all of that, how do you invest with confidence into a market where a decision by one person or one country can throw markets off in a big way, and with a click of a finger? Now, it's in nobody's interest for this to happen. So my best guess going forward is that they'll sit down, find an agreement and move on, and the market grinds higher. That's where I think we end up. Having said all of that, you've got to really understand what the risks are here, because we are dealing with a stock market that is really at high valuations. And if there was a recession induced by, for example, a trade war, you will be talking about 30-40% coming off the value of this market in a heartbeat. And that's the risk that's out there. Having said all of that, and as I've said before, I do think this market is just going to grind higher, and that they'll come to some sort of resolution. So, my preferred way to trade this would be through lower risk option strategies, which we'll discuss in another video. But I think it's really important for you to understand how quick things can shift if there was some sort of a trade war escalation. And again, just to repeat, I don't think it's in anybody's interest for that to escalate. And for me, they sit down, they talk, they find a solution, and the market grinds higher. So yesterday there was a bit of a de-escalation. President Trump released a statement saying China made a mistake, and we'll find a solution to this. And you can see the futures are up 1.5% off the back of that news. So that's how quick it's getting de-escalated. But I do think it's important to mention that. So we're just going to talk about on our short-term stock trades today. We're really just going to talk about the stocks that we've invested into. And we're not going to focus in on any new trades, because literally hundreds of stocks showed up in our scans, as you could imagine, with such a sell-off. So we're really only going to focus on the short list that we already had. And we will add more as and when we see fit. We want to see how the next couple of days plays out in this market before we add any more stock. So we invested into Alaska Airlines. It's revisited this low. I'm not concerned about this. This is a good long-term and short-term trade. Happy to own that. Flutter, as you can see, is recovering 1.6% of whatever it gave away on Friday. And again, like that for the longer term. MGM, and Domino's, which we just invested in on Friday, actually just before that tweet was put out. You can see that made a new low, MGM. So we'll see how that recovers. But again, like it for the medium and long term. And then Domino's Pizza here, that was actually up on Friday. Did quite well. They've got earnings this week, so it'll be interesting to see how they'll perform. So we're sticking with those four trades, not panicked again. This is the reason why we look for fundamentally sound companies that are oversold. We don't deal in stocks that we don't, are not profitable, for example. We use that in conjunction with our proprietary equity scan tool. The other stocks that were on our watch list, obviously they become more interesting now. Meta, for example, we said if Meta got to $700, we'd be interested. It's up in pre-market, but it's still early days yet. There might be some back and forth yet that might cause the market to continue to wobble. GoDaddy was another one. It's revisited its lows there. That's very interesting. Caesars, because we're in MGM, we wouldn't bother with Caesars, so we leave that. Schlumberger dropped 4% on on Friday, obviously because oil prices came down on Friday as well in a big way. Now oil prices have recovered since, um, but Schlumberger went down, and that kind of I think that's a trade I like next. If I was going to place a trade next, it's Schlumberger, because I don't think it's in anybody's interest for this to continue, and certainly it doesn't make sense for companies producing oil, for example, to produce it at such a low price for a lot of companies. So, you would imagine at some point in time, um, oil wells might get shut down, and that's what is happening now to the price of Schlumberger. That's being priced in advance. Um, Price should stabilize in oil, and as the stabilization in oil prices happen, then you would expect Schlumberger to rise with it. And then Verizon dropped 2.4% Friday too. Now, part of that was because it went ex-dividend, so just be aware of that. So this is a high dividend paying stock. It pays a 7% yield, and we like that for about a longer term play as well too. So we're not going to buy any more, let's say, for the next day or two in the short-term active trade portfolio. I just wanted to update you. The 4 stocks we're on, we're still happy to own them. They're stocks we'd be owning for the longer term. But because of what's happened Friday, it might take a little bit longer than we anticipated to get out of some of those stocks at our short-term target prices. But again, we'd hold them for the long term too. And then just finally, returning back to the S&P 500, this is something we've been hoping and waiting for pretty much all year. If we got RSI down below 30 there, I would be buying into the market. It doesn't look like it's going to happen now, of course, because we have it up in pre-market, but you just don't know what's going to happen in between. Maybe there's some more back and forth that causes this market to sell off and gives maybe investors get a little bit more anxious. But again, just to reiterate, it just goes to show you how quickly this market could correct if something like that did escalate. And that's the dilemma every investor is involved in. So I do think you need something to come off the market in order to go long on it. I wouldn't be buying into this dip just yet. Broadly speaking, I would rather use the options market, and I'll discuss that in a separate video. Okay, this is Stephen from Share Navigator with a short-term active trade outlook. Thanks and bye for now.